Hello, Louis Ubaka. I'm very happy to meet you today. You are working for Columbia Threadneedle and you are portfolio manager for the CT Lux American small companies, right?
Correct.
Correct. So we have a few questions. The first of all is US small caps underperform the broad US equity market last year. The new year so far has not been much better. Will the turnaround for small caps come in 2024?
Well, we certainly hope so. We don't have a crystal ball or anything like that, but we think, if you look at small caps, they look particularly interesting right now, and that's for, several reasons. So the first reason being, if you look at smaller companies, they tend to be more levered to the US economy, by which I mean the lower you go in market cap, the more their revenue is derived domestically versus internationally. And that's important because, it's our view that while for sure the global economy is slowing, you can make the case that potentially the US looks slightly more resilient than the rest of the world. And so, if you want a pure play on the US economy, the small caps are the way to do that. The second point is that they tend to be much better diversified than their larger cap counterparts. We've seen big outperformance of, the so-called Magnificent Seven. And so if you look at the S&P 500 today, there's a significant allocation to information technology businesses and communication services businesses. And if you look at the next 10 years, you could make the case that maybe the next 10 years looks quite different to the previous 10 years. So if you think that, maybe the market factors that have contributed to that outperformance could change, then actually small caps are much more diversified at the index level, and so should bring about more diversified performance. The final point, and is one that is obviously no surprise to anyone listening to this, but is valuation. Small caps, as you rightly say, have underperformed large cap, and that's meant that the valuation discrepancy between small cap and large cap is, near to 10, 20-year highs. That's unusual historically. Small caps have tended to trade at a premium to large cap. That's now flipped to a discount, and actually we're at the point where small caps are trading at a discount to their own history as well. So we think drawing all of those together, small caps are a particularly interesting place to look at the moment.
Okay, so US small caps companies are often more heavily leveraged. Debt servicing, therefore, is a big deal for these small businesses. Do you think that the prospect of falling interest rates could create some tailwind in terms of financial stability for those companies?
For sure. As you rightly say, small caps do tend to be more highly levered. And even more than that, the leverage that they do have tends to be more likely to be floating rate as opposed to fixed rate. Larger caps tend to have more fixed rate debt. So it means as rates come down, small caps are disproportionately benefited in the form of their interest rate coming down, their interest expense coming down, and so that should help improve their profitability. I think as well, something that's not really spoken about too much is M&A activity. So, small caps are an asset class that really benefit from M&A activity, and we've seen a pullback in volumes in terms of M&A activity, just because interest rates have been high and the cost of funding has been high. So if consensus, the market has us seeing declining interest rates in 2024, that could not only benefit small caps in the form of lower interest expense, but it could benefit in the form of more M&A activity, private equity and larger strategics coming into the market and buying a lot of these smaller companies.
Okay, in which sectors do you see the greatest opportunities for the small caps? Could the tech sector play an important role?
For sure. I mean, I know, technology and AI is particularly in vogue, shall we say, at the moment. And small cap can for sure benefit from that. So, we're seeing a lot of opportunities in what we'd call the picks and shovels of AI. So, those businesses that enable AI and Gen AI to become widespread and to scale. For sure, we see opportunities there, but even beyond that, in areas like cybersecurity and cloud computing, there are plenty of small caps to benefit there. In terms of more broadly the sector opportunities that we're seeing, I think industrial is a big area of opportunity because of things like infrastructure spending and the IRA within the US, and so a lot of these smaller companies are seeing really dramatic tailwinds from that. And then finally, healthcare. So within small cap, I think we're quite fortunate to have a very diverse range of very exciting and innovative healthcare companies that we can really find opportunities there as well. So it's not just the tech sector that's exciting. It's I think there are many areas of small cap that are exciting.
Okay, small cap investment are considered riskier than those in major markets. Therefore, diversification across a large investment universe is crucial. Is a small cap universe large enough and deeply researched to diversify investments? What do you think?
For sure. So I think that, or we think that, for sure that the lower down in market cap you get, the less deeply researched companies are. But that brings about an opportunity because you find a higher proportion of mispriced opportunities or hidden gems that market participants just aren't aware of, or have overlooked, or just frequently aren't known. So we see a ton of opportunities like that just from poorly covered or uncovered businesses. That within our universe there are 2,500 stocks and even more outside of our universe that we can select from. So we don't at all feel we have any issues sufficiently diversifying the portfolio. We see opportunities that are pretty broad and pretty idiosyncratic in nature. So diversification is never really been an issue for us, and the opportunity set has always been pretty compelling.
Okay, so the last question, maybe the most important one. What is the difference of your fund from other US small cap funds? What is the real difference?
Sure. So, you mentioned that small caps are, typically considered a more risky asset class. And, we're cognizant of that. So a big focus for us is a focus on risk-adjusted returns as opposed to just outright returns. For us, we think that it's not a good outcome for clients if we, deliver incredible returns one year and then blow up the next, right? That's not a good client outcome. What we want to deliver is consistent, repeatable returns year in, year out, at an attractive level of risk, effectively. Now, we deliver that two ways. One way is through our bottom-up stock picking. So we really want our bottom-up stock ideas to drive the majority of the performance of the portfolio, and we deliver that via our research intensities. So we have a team of 20 to 25 equity research analysts who are extremely experienced. They help us really research these ideas, we think, in a much more intense way than a lot of our competitors, and so that allows this stock specific risk to really drive the portfolio. The second point is around our portfolio construction. So we tend to be relatively factor neutral and sector neutral. And that's really because, we don't feel we have an edge in predicting any macro factors or which style is going to outperform when. We really don't feel we have an edge there. So we really want our bottom-up ideas to drive the performance of the portfolio. Mitigate a lot of these top-down macro factors from affecting the portfolio, and hopefully that brings about attractive risk-adjusted returns for clients.
Thank you very much, Mr. Ubaka, for this interview, and we wish you all luck for the future. Thank you.
Thank you very much.